Dean Kim, head of global research project at William O'Neill and Company, joining us now to take some questions. Dean, great to have you with us here back in the program. Thank you very much. How are things looking now for U.S. equities first, the NASDAQ specifically, and then come to India? I mean, how are things looking for the Nifty, the benchmark? Go on.
Yeah, so the NASDAQ specifically, we put the market back down to downtrend today after the close as it undercut September lows. And, basically we're looking at another 6% lower in terms of next level support at around 9,800. And that's going to take us to, 40% off high. And so I think there's a lot of volatility in the market. Starting with last week, we've seen non-farm payroll coming in hotter than expected. That started the volatility. And then today, of course, we've got the news around the British gilt and the Bank of England trying to stabilize the pension market. And that's causing sort of a black swan type of event in Europe. And let's not forget that, there are pension funds all over the world. It's a very large market, and what these pension funds were doing is they're using derivatives to squeeze out more gain. And of course, we've seen the volatility in the bond market, and performance has been very poor. And they're faced with liquidity crunch. So I don't think this is over yet. So we are looking at potentially another leg down on the NASDAQ. And also, we're looking forward to PPI numbers coming out tomorrow and CPI numbers on Thursday. And if they come in, higher than expected, the Fed is going to stay the course and continue to raise rates, which, of course, is going to put some more further pressure on the market as well. And so on the other side, we've seen oil markets going back, oil prices going back up, and the U.S. dollar is spiking again. So, definitely we're in a storm at the moment.
Okay, we're in a storm at the moment. Doesn't look good at all. Dean, you spoke about how the bond market mayhem in Europe could turn out to be a black swan event globally. What does this mean for risky assets like emerging market equities? Because India so far has been quite resilient. We've barely lost about 2% of our value this year. Do you think that outperformance or resilience can continue? Or is it, a situation where a big storm will take all boats with it?
Yeah, that's something we're looking at very closely. I mean, Indian market, has been very resilient, and it's going to test the 200-day moving average currently at around 57,000 on the Sensex. We see the next level support at 100-day moving average, which is about 1% away at 56,000. And support after that is around 55,000, only 4% away. So, but let's hope that, the market finds support at the 200-day moving average. That would be a very good sign. Outside of India, when you look at rest of Asia, they're already down 35% off highs. And when you're looking at AAXJ, index as well as EEM, so definitely India is the bright spot, continues to be. And but we pay attention to technicals, so we want to make sure that the market can find support at the 200-day moving average. And if not, it's not all bad. We have another level of support 1% away at the 100-day moving average.
Right, Deem. We're seeing some support, like you said, at the 200 and the 100-day moving average. What if, there was some black swan event, so to say, there was further downside that we saw in global markets and the Nifty were to break that 100-day moving average as well? Then would all bets be off given the outperformance and the valuations of the Indian market?
Potentially. If we break the 100-day moving average, like I said, I think there's a fair amount of support at 55,000. It could be a short-term knee-jerk reaction, but when you're looking at fundamentals for India, it's quite strong. GDP growth still outpacing the rest of the world at around 6%. You have lower inflation relative to the rest of Asia, and as well as very strong middle class income coming up. So there's a lot of good things, baked into fundamentals for the Indian market, and that's why we continue to love it. But definitely, if we do see, global storm, of course, we're going to see some knee-jerk reaction, but I would say those are buying opportunities for India.
Oh, that's an optimistic note that we're ending this conversation on. Dean, thanks a lot for joining in. So if there is a global storm, of course, is brewing, but if there's a further sell-off in India, then that definitely is a buying opportunity. That's the word coming in from our global expert. Let's do one thing. Let's take a quick commercial break. We'll drill it down to the specifics. We have lots of numbers coming through today as well. HCL Tech and Wipro. More on that coming up. Stay tuned.